Hi, folks. Welcome back to Just Ask George. I'm David Wolf, affiliate banker with BH Capital, here with the founder, the dude, the president of BH Capital, the website, www.bhcapitalltd.com. I want you to know that. He's one of the sharpest minds in structured finance.
Thank you very much.
We call this our grab bag segment.
There it is.
Because we grab it out of the bag, and and George gets a chance to talk about a variety of subjects relating to corporate finance. Today,
the idea is trying to stump me. That's what you try and do every week.
Am I trying to stump you?
That's the goal.
So if I said, George, this is like the Rorschach test, market value / financial statements. Talk to me.
What's the importance of a market value financial statement? Well, GAAP, generally accepted accounting principles, and the rules you work under when you produce a financial statement does not really reflect the actual value of a company. It may not reflect the value of the assets. It may not reflect some very specific things like a customer list. Let's say you've got a customer list that, and we ran into this, of some 60-some thousand customers that kept coming back to this particular company that had a very, very successful e-commerce site. There's a value to that. And there are ways to calculate it. Another case in point is one time there was a custom harvesting company. And what they did is they owned about 24 combines, big, huge pieces of machinery, hundreds of thousands of dollars a piece. And each one of those units was responsible for producing X number of dollars of revenue every year. Okay. As long as they kept those machines running, they produced. And they actually had more business than they could handle in any one harvest period. It was pretty amazing. And so a market value financial statement really looked at the business, not only at looking at that equipment and its depreciated value, but what that asset could produce in revenues, and sort of extrapolated that out and said, this equipment's really worth X to the company because this is what it produced. Almost like having rental space and you've got a price per square foot. This was its ability to output. Is
this a balance sheet line, or where does this fold into the financial statements as presented?
Well, normally a market value statement is put in the footnotes of a company's financial statement, and it can be very complex. Harken back to the days of the internet bubble, and there was a valuation that they were utilizing based on the number of hits your website got, which is absolutely.
I remember this.
One of the very crazy things that was done at that time. But what they were trying to do in the case of somebody like Amazon at a formative stage where they were is, look, we really don't have a lot in sales right now, but we're building the brand, the Amazon brand, and we're going to have to reach out there, into the World Wide Web and let people know about what they can get from Amazon, what they can buy from Amazon, the sort of community element there. And there were ways that was explained in all of their original filings very creatively. And there was a market value financial statement. There was a lot of footnoting in there. So it's important to understand that there's a different way to tell a story about a company's true value other than just staring at a set of financial statements that really give you a very narrow picture.
All right, thanks, George. Next in the grab bag, I'm going to stump Just Ask George, right?
Try and get me.
Let's talk about how should we think about a marketing budget as a business owner? How should we think about the importance of it?
When you start talking about capital formation, you've got a business plan and then the shorter version, the executive summary. Somewhere in there in your use of proceeds, you're going to have something related to marketing, and that business plan is really more like a blueprint. It's not just a story. It's telling investors, lenders, this is how I'm going to do what I'm going to do. This isn't my dream. It's sort of not like Steven Spielberg, in animated form, putting a cartoon together. No, this is what I'm working from. This is my working blueprint. Within the boundaries of that blueprint, there's going to be a marketing budget. If you're selling a product, you're selling a service, you're selling a website, how are you going to do that? That marketing budget is probably one of the most key and critical items that an investor or lender is going to look at, because it's going to tell the story of how you're going to do what you're going to do, how you're going to wisely spend money to create results. So when you get to that point, be detailed, be explicit, be explanative from the standpoint of tell people how you're going to deploy money to create results. That's what marketing budgets are supposed to do.
I love that. Okay. How are you going to drive the revenue through marketing? Okay. So, and get granular. Don't be afraid to get.
I used to have back in my old rental car days, I had a guy in Boston, and we were acquiring his operation, and I said, you've really done a fantastic job at creating a customer base in your operation. And he goes, Judge, it's about 3 things here in Boston: marketing. That's his line. I can still hear him today.
Wow.
And if I asked him to expound on that anymore, I'd say, it's a big discussion, marketing. There's a lot to it. And he was right.
Yeah.
He was right.
And there it is illustrated. Finally, with the grab bag, George, let's talk about the footnotes found in financial statements, often found in financial statements. And sometimes we don't see them, but often we do.
And they're more of a formative tool now than ever. In many cases, the financial statement doesn't really do justice in telling how the numbers got to be the numbers. So the footnotes is the opportunity to explain what occurred. When you're a public company, the requirements now under SOX are, in terms of footnoting and disclosure, are pretty extensive. What I do when I have a discussion with an entrepreneur is I'll say, look, let's talk with your accountant. Even though this is a compiled financial statement, let's really get them to spend some time on the subject of footnoting. Let's tell the story. So the story part of the financial statements can take place in the footnotes. The footnotes, there's no rules on saying on a compiled statement how short they have to be or how long they can be. So the more you tell through the footnotes, the better off you are.
So it's an explanation of a line.
Absolutely.
Is that it? Okay,
Absolutely.
Great. George, as always, amazing stuff. You're just full of knowledge capital around structured financing, and I love this grab bag segment because I get to learn about new stuff, and
you get
we're
to
literally
try and stump me and make me go
and I know it's not nearly possible to do. More information about BH Capital and the work of George Lovato Jr. at www.bhcapitalltd.com. And, of course, this segment brought to you by the Obstacle Course website, www.obstaclecoursebooks.com. We'll see you next time on Just Ask George. This has been the Grab Bag segment. Thanks, George.
All right, buddy.
Yeah,
appreciate it.
All right.